Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down 37 basis points. On Wednesday we broke an all-time high. On the 1-hour RSI we are slowly approaching to oversold territory, and as for the 1-hour MACD we are approaching negative MACD as well. And we broke several support. We are below the 50 moving average. And as for the 4-hour chart, we see a divergence shaping overnight, and we may see a divergence on the 9 and 18 moving average as well. And if we expand out to the daily chart, we start to see that we are quite far above the moving averages. So I do see us touching the 18-day moving average, which is this purple line. This purple line also coincides with past support. We found support back in November 21st at around $310.25. So that is our immediate support if we do fall down lower. And if we move back to the 4-hour chart, that also coincides with the 100 moving average on the 4-hour chart. So back to the daily chart. As for resistance, as indicated back in Wednesday, we broke an all-time high at $315.48. So if we were to move down lower, that price movement is roughly around, I would say 1.11%, and to the upside it is around 40 basis points to the upside. So the forecast model is now available in the link below, so do check it out. If you configure the settings, you can get all the models that I do not go over in this video, so do check it out. And yeah, again, it's in the link below, so do check it out. So back to the forecast model, I'll go day by day, where the S&P 500 will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. This trend dates back to July 22nd to October 15, 2010. So let me point out why these two charts are similar. So while we have in the beginning of the trend, we averaged above the middle Bollinger Band for several days. And then we proceeded to break down, touch the bottom Bollinger Band. After touching the bottom Bollinger Band, we do see it average above the middle Bollinger Band once more, all the way to towards the end. So let's mark that. So we have that point right there. And in the trend in question, we start to see similar pattern shaping as well. In the beginning, we average above the middle Bollinger Band, and then we see a breakdown to touch the bottom Bollinger Band, and then we made a nice bullish reversal, climbing all the way, averaging above the middle Bollinger Band for several days. We have about 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was July 22nd to October 15, 2010. Back then, the S&P 500 was up around 85 basis points. So overall, I do see the S&P 500 may be heading sideways price action or even higher. So again, this forecast model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.